Good day to you all, and welcome. My name is Aldrich, and I shall be your guide today through what I consider one of the most important and most misunderstood roles in the non-profit world. Before we begin, a small confession. I am not, strictly speaking, a real person. I am an AI-generated avatar. My words were crafted by Claude 4.6 Opus. My image was created by Nano Banana Pro, and my likeness was brought to life by Hey Gen. But I assure you, the knowledge I'm about to share is very real, very practical, and very much worth your time. Now then, today we are going to focus exclusively on one role, the Director of Finance of a fiscal sponsor-host organization. Not the Executive Director, not the Program Managers, not the Accountant, just the Director of Finance. Why? Because in a fiscal sponsor organization, one that manages funds held in trust for 35 community projects, the Director of Finance is the person who stands between order and chaos. They are the guardian of every dollar, the architect of every financial system, and the person the auditors will look to when they have questions. Over the course of this presentation, we will cover everything this role entails. We will walk through the systems the Director of Finance owns, Sage Intacct and the integrations with GiveButter and Bill.com. We will examine the daily tasks, the monthly close process, the grant management responsibilities, and the annual audit cycle. We will discuss what the Director of Finance does personally and what they depend on others to complete. And we will talk about the internal controls and oversight responsibilities that make this role the financial conscience of the organization. Whether you are the person stepping into this role, the Executive Director who will work alongside them, or a board member who wants to understand what this position truly requires, this presentation is for you. So settle in, and let us begin. Let us begin by understanding where the Director of Finance sits within the organization, because position determines both authority and responsibility. The host organization has 5 people in its central office. At the top is the Executive Director, who provides strategic oversight, manages the Board of Directors, and holds ultimate compliance authority. Then there are 2 program managers who serve as the day-to-day liaisons with the project leaders, handling communications, onboarding, and operational coordination. And there is the accountant and administrative support person who handles the transactional volume, processing payments, reconciling accounts, and keeping the administrative machinery running. And then there is the Director of Finance. This role reports directly to the Executive Director, but in terms of daily operational impact, the Director of Finance touches more functions than any other position in the organization. In a comprehensive analysis of every job function in this organization, the Director of Finance is involved in 292 distinct functions, more than any other role, including the Executive Director. The Director of Finance directly supervises the accountant, which means they are responsible not only for their own work, but for ensuring that the accountant's work is accurate, timely, and complete. They serve as the financial authority for all 35 sponsored projects, 20 active and 15 with limited activity. Every dollar that flows through this organization, every donation received, every payment made, every grant tracked, ultimately passes through the Director of Finance's domain. And they are the primary liaison with the external auditors and the CPA firm that prepares the Form 990. When the auditors arrive, they are not looking for the Executive Director first. They are looking for the Director of Finance. In short, if the Executive Director is the head of the organization, the Director of Finance is its spine. Everything else depends on it standing straight. Before we dive into these specific tasks and systems, I want to establish the philosophical foundation of this role. Because if you understand why the Director of Finance does what they do, the what and the how will make much more sense. The Director of Finance operates on 3 pillars: Think of them as the three legs of a stool. Remove any one, and the whole thing falls over. The first pillar is stewardship. A fiscal sponsor host organization holds funds in trust on behalf of other people's projects. These are not the organization's funds to spend as it pleases. They are held under a fiduciary duty, which is the highest standard of care recognized in law. The Director of Finance is the person most directly responsible for honoring that duty on a daily basis. Every payment they approve, every journal entry they record, every fund balance they verify, all of it is an act of stewardship. When a donor gives $100 to a community garden project, they trust that $100 will be used for that community garden. The Director of Finance is the person who makes sure that trust is honored. The second pillar is accuracy. In non-profit accounting, and especially in fiscal sponsor accounting, there is very little room for error. If a donation is coded to the wrong project, that project's fund balance is wrong. If a restricted grant expenditure is classified as unrestricted, the restricted fund balance is wrong. And when the auditors come, and they will come, they will find those errors. The Director of Finance is the last line of defense against inaccuracy. They verify what the accountant enters. They review what the integrations sink. They catch what the systems miss. The third pillar is transparency. The Director of Finance produces the financial reports that project leaders, donors, funders, and the Board of Directors rely on to make decisions. Those reports must be not only accurate, but understandable. Many of the people reading them are not accountants. They are community organizers, board volunteers, and program officers at foundations. The Director of Finance must translate the language of debits and credits into the language of impact and accountability. Stewardship, accuracy, transparency. Every task we discuss from this point forward serves one or more of these pillars. Keep them in mind. Now we arrive at the Director of Finance's most important tool, Sage Intacct. If this role has a wand, Sage Intacct is it. Let me be very clear about the relationship between the Director of Finance and Sage Intacct. The Director of Finance does not merely use this system, they own it. They are responsible for how it is configured, how it is maintained, and how it performs. If something is wrong in Sage Intacct, it is the Director of Finance's problem to solve. Let's walk through what that ownership means in practice. First, the chart of accounts. The Director of Finance designs the chart of accounts, the complete structure of asset, liability, net asset, revenue, and expense accounts that the organization uses. They decide how many accounts are needed, how they are numbered, and how they are categorized. When a new account is needed, say a new expense category for a type of project activity that didn't exist before, the Director of Finance creates it. When an account becomes obsolete, the Director of Finance deactivates it. No one else touches the chart of accounts. Second, the dimensions. This is where Sage Intacct becomes truly powerful for a fiscal sponsor. The Director of Finance creates and maintains all four dimensions: project, fund type, grant, and department. When a new project is onboarded, the Director of Finance creates the project dimension code. When a new grant is awarded, the Director of Finance creates the grant dimension code and configures the budget and alerts. These dimensions are the DNA of every transaction in the system. They determine how every dollar is tracked, reported, and audited. Third, the Grants Management module. The Director of Finance sets up every grant in this module, entering the award amount, the budget by expense category, the grant period, the spending restrictions, and the budget alerts. This is not delegated. The Director of Finance must understand the terms of every grant to configure the system correctly. Fourth, financial reporting. The Director of Finance designs the report templates, the project-level profit and loss statements, the consolidated financial statements, the grant budget to actual reports, the restricted fund balance schedules. They also configure the dashboards that give the executive director real-time visibility into the organization's financial health. Fifth, user permissions. The Director of Finance controls who can access what in Sage Intacct. The accountant gets data entry access but cannot close periods. The program managers get read-only access filtered to their projects. The executive director gets full read access but no data entry. These permissions are an internal control, and the Director of Finance is responsible for setting them correctly and reviewing them quarterly. And sixth, and this is critical, the Director of Finance is the only person who can close an accounting period. When the monthly close is complete, the Director of Finance locks the period so that no further transactions can be posted to that month. This protects the integrity of the financial records. Now, what does the Director of Finance not do in Sage Intacct? They do not enter routine daily transactions. That is the accountant's job. They do not perform the daily bank reconciliation. Again, the accountant. And they do not manually enter accounts payable transactions because those sync automatically from bill.com. The Director of Finance's role in Sage Intacct is architectural and supervisory. They build the system, they configure the rules, they review the output, and they close the books. Others enter the data. The Director of Finance ensures the data is correct. Now let us go deeper into the dimensional architecture, because this is where the Director of Finance's expertise truly shines, and where mistakes are most costly. Think of the 4 dimensions in Sage Intacct as the 4 cardinal directions on a map. Every financial transaction in your organization exists at a specific point on that map, defined by which project it belongs to, what type of funds are involved, whether a specific grant is funding it, and whether it is a host organization cost or a sponsored project cost. The Director of Finance draws this map. Let's start with the project dimension. The Director of Finance creates 36 values, 1 for each of the 35 sponsored projects, plus 1 for the host organization itself. The naming convention must be consistent and logical. I recommend a format like PRJ-001 followed by the project name. This dimension is required on every single transaction, no exceptions. If a transaction enters the system without a project code, it is an orphan. It belongs to no one, and it will cause problems during reconciliation and reporting. The Director of Finance sets the validation rules to prevent this from happening. The fund type dimension has 3 values: unrestricted, temporarily restricted, and permanently restricted. This dimension drives the net asset classification on your financial statements, which is one of the most scrutinized areas in a non-profit audit. The Director of Finance must ensure that every revenue transaction is tagged with the correct fund type at the point of entry. A general donation to a project is unrestricted. A donation designated for a specific purpose, say scholarships only, is temporarily restricted. Getting this wrong means your restricted fund balances are wrong, which means your financial statements are wrong, which means your auditors will have findings. The grant dimension is where the Director of Finance spends significant setup time. For every active grant across all 35 projects, the Director of Finance creates a unique dimension value and configures the grants management module. This means entering the award amount, the grant period, the budget broken down by expense category, and the spending restrictions. The Director of Finance also configures budget alerts. I recommend alerts at 75% and 90% of each budget line item. When spending approaches those thresholds, the system notifies the Director of Finance so they can take action before a budget is exceeded. The department dimension is the simplest, just 2 values, but it serves a critical purpose. It separates the host organization's own administrative costs from the program funds flowing through to sponsored projects. This separation is essential for the board, for funders, and for the Form 990, which requires functional expense reporting. Finally, the Director of Finance designs every financial report template the organization uses. Project-level profit and loss statements, grant budget-to-actual reports, restricted fund balance schedules, consolidated financial statements, cash position summaries, executive dashboards. Each of these reports is built by filtering and combining the 4 dimensions in different ways. One ledger, one chart of accounts, 4 dimensions. And from that foundation, the Director of Finance can answer any financial question anyone asks. This is architectural work. It requires deep understanding of both accounting principles and the Sage Intacct platform. And it must be done correctly from the beginning, because retrofitting dimensions after thousands of transactions have been recorded is, to put it gently, an experience you do not want to have. The Director of Finance does not work in Sage Intacct alone. 2 other critical systems feed data into the general ledger: GiveButter for incoming donations and Bill.com for outgoing payments. The Director of Finance is responsible for how these integrations are configured, even though they are not the person checking them every day. Let me explain the distinction, because it is important. The GiveButter to Sage Intacct integration is the pipeline through which all donation revenue enters the general ledger. The Director of Finance designs this pipeline. They map each GiveButter campaign to the correct project dimension in Sage Intacct. They map donation designations to the correct fund type dimension, so that a general donation is coded as unrestricted and the purpose-restricted donation is coded as temporarily restricted. They map the processing fees that GiveButter deducts to the correct expense account, tagged to the correct project. And they decide the sync frequency. I recommend a daily batch sync, which balances timeliness with manageable verification workload. Once this pipeline is built, the accountant is the person who checks it every day. The accountant verifies that yesterday's donations in GiveButter match the entries that appeared in Sage Intacct. The accountant matches the GiveButter payouts to the bank deposits. But if the accountant finds a discrepancy they cannot resolve, a donation that synced to the wrong project, a fund type that was misclassified, a payout amount that doesn't match, that gets escalated to the Director of Finance. The same pattern applies to the Bill.com to Sage Intacct integration. The Director of Finance maps the payment categories to the correct expense accounts, maps the project codes to the correct project dimension, and maps the grant codes to the correct grant dimension. They also configure the approval workflow, the tiered system where payments under $500 can be approved by a program manager. Payments over $500 require the Director of Finance, and payments over $5,000 require the Executive Director. The accountant verifies daily that processed payments posted correctly to Sage Intacct. But the Director of Finance owns the architecture. Think of it this way. The Director of Finance builds the bridge. The accountant walks across it every day and reports whether it is holding. If a plank is loose, the accountant fixes it. If the bridge needs structural repair, the Director of Finance steps in. This division of labor is essential. If the Director of Finance spent their time on daily sync verification, they would never get to the higher level work, the financial statements, the grant management, the audit preparation, that only they can do. Let us now walk through what a typical day looks like for the Director of Finance. Because while the strategic and architectural work we've discussed is important, the daily rhythm is what keeps the organization running. The day begins at 8:30 with the daily stand-up, a 15-minute meeting with the entire 5-person team. The Director of Finance uses this time to share their priorities for the day, flag any pending approvals that need attention, and hear from the accountant about the status of the previous day's sync verifications and any discrepancies that were found. This is also when the program managers might flag a financial question from a project leader that needs the Director of Finance's input. 15 minutes. Focused. No tangents. At 9 o'clock, the Director of Finance moves into their morning financial review. The first task is reviewing and approving payment requests in Bill.com that exceed the $500 threshold. These are the Tier 2 approvals, the payments that have already been reviewed by a program manager but require the Director of Finance's financial sign-off. We will discuss this approval process in detail on the next slide. The Director of Finance also checks the daily cash position. This means looking at the balances across all bank accounts and confirming that the organization has sufficient liquidity to meet its upcoming payment obligations. If a large grant payment is expected to arrive this week, the Director of Finance notes it. If a large batch of approved payments is scheduled to go out, the Director of Finance confirms the cash is available. They also review the accountant's daily reconciliation summary, a brief report confirming that the GiveButter sync and Bill.com sync were verified and noting any discrepancies. If the accountant has escalated a discrepancy, the Director of Finance investigates and resolves it during this block. From 10 o'clock to noon, the Director of Finance shifts to strategic financial work. This is the time for reviewing grant budget utilization reports, checking whether any grants are approaching their budget limits or spending too slowly relative to the grant timeline. It is the time for addressing financial questions that the program managers have escalated. Perhaps a project leader wants to know if they can reallocate funds between budget categories, or a funder has asked for an interim financial report. During the monthly close period, this block is consumed by close activities, reviewing the trial balance, verifying restricted fund balances, and preparing financial statements. The Director of Finance also approves new vendor records during this block. When the accountant creates a new vendor in Bill.com, the Director of Finance reviews the record before any payment can be processed to that vendor. This is an internal control. It prevents fictitious vendors from being created and paid. In the afternoon, from 1 o'clock to 4 o'clock, the Director of Finance focuses on reporting and oversight. During the monthly close period, this is when financial statements are prepared. During audit season, this is when the Director of Finance works with the auditors. On routine days, this is the time for reviewing and approving journal entries that the accountant has drafted, conducting periodic spot checks of transaction documentation, and working on longer-term projects like updating report templates or refining the chart of accounts. Notice the pattern. The morning is reactive, responding to what came in overnight and what needs immediate attention. The afternoon is proactive, building, reviewing, and improving. A Director of Finance who spends all day reacting is a Director of Finance who is falling behind. Of all the daily tasks the Director of Finance performs, payment approval is the one that most directly protects the organization's funds. Let me walk you through exactly what happens and what the Director of Finance is looking for. Every payment in this organization follows a 4-stage life cycle. Stage 1. The project leader submits a payment request through Bill.com with supporting documentation. Stage 2. The assigned program manager reviews the request to confirm it aligns with the project's approved budget and that the documentation is complete. This is the Tier 1 approval. Stage 3. The Director of Finance reviews the request from a financial perspective. This is the Tier 2 approval. And Stage 4, the accountant processes the approved payment. Now the Director of Finance is only involved at Stage 3, and only for payments exceeding $500. For routine expenses under $500, the Program Manager's Tier 1 approval is sufficient, and the payment goes directly to the accountant for processing. This is by design. If the Director of Finance had to approve every single payment across 35 projects, they would do nothing else all day. But for payments over $500, the Director of Finance's review is mandatory. And here is exactly what they evaluate. First, does the project have sufficient funds? The Director of Finance checks the project's current fund balance in Sage Intact. If the project has $10,000 available and the payment request is for $2,000, that is fine. If the project has $3,000 available and the payment request is for $2,800, the Director of Finance needs to consider whether approving this payment will leave the project with an uncomfortably thin margin. Second, If the expense is being charged to a grant, is it allowable? The Director of Finance must know the terms of the grant well enough to determine whether this type of expense is permitted. A grant that funds direct program services may not allow the purchase of office furniture. A grant with a 15% administrative cost cap may not allow another administrative charge if the cap has already been reached. Third, if grant funded, will this expense push any budget line item over its approved limit? The Director of Finance checks the grant budget to actual report in Sage Intact. If the supplies line has a $5,000 budget and $4,800 has already been spent, a $300 supply purchase will exceed the limit. The Director of Finance must decide whether to approve the expense and request a budget modification from the funder, or to deny the expense and ask the project leader to find an alternative funding source. Fourth, does the expense fall within the grant period? A grant that ended on March 31st cannot fund an expense incurred in April. This seems obvious, but it happens more often than you might think, especially when project leaders are not closely tracking grant timelines. Fifth, is the vendor's W-9 on file? For new vendors, the Director of Finance confirms that the accountant has collected the W-9 before the first payment is processed. This is a compliance requirement for year-end 1099 reporting. And sixth, are the payment terms correct? Is this a net 30 invoice, a due upon receipt invoice, or a rush payment? The Director of Finance ensures the payment timing is appropriate. For payments exceeding $5,000, the Director of Finance's approval advances the request to the Executive Director for an additional Tier 3 review. The Executive Director evaluates the payment from a strategic and reputational perspective. And here is the most important rule of all. The Director of Finance never initiates a payment and approves it. The person who requests a payment cannot be the person who approves it. This separation of duties is the cornerstone of internal controls in any organization managing funds held in trust. If the Director of Finance needs to make a purchase for the host organization itself, they submit the request like anyone else, and the Executive Director approves it. No exceptions. If there is one process that defines the Director of Finance's role more than any other, it is the monthly close. This is the ritual, and I use that word deliberately, that transforms a month's worth of individual transactions into a coherent financial picture. The monthly close happens in the first 2 weeks of every month, covering the financial activity of the prior month. The Director of Finance owns this process from start to finish. They do not do every task themselves. The accountant handles the preparatory work, but the Director of Finance is responsible for the quality and completeness of the final product. Let me walk you through the sequence. During the first week, the accountant is doing the heavy lifting of preparation. They complete bank reconciliations for every bank account. They verify that every Give Butter payout for the prior month has been matched to a bank deposit. They verify that every Bill.com payment has posted correctly to Sage Intact. They draft accrual entries for expenses incurred but not yet paid, and they prepare the preliminary trial balance. All of this work is delivered to the Director of Finance by approximately business day 5. And this is where the Director of Finance's personal work begins. The first task is reviewing the trial balance. Not glancing at it, reviewing it, line by line. The Director of Finance looks at every account balance and asks, does this make sense? Is this revenue figure consistent with what I expected based on donation activity? Is this expense figure reasonable given the payment requests I approved? Are there any accounts with unexpected balances, a negative cash balance, an unusually large receivable, an expense account that spiked? Every variance gets investigated. Some will have simple explanations. A large grant payment arrived late in the month, or a batch of payments was processed on the last day. Others may reveal errors that need to be corrected. Next, and this is the single most critical step in the entire close process, the Director of Finance verifies the restricted fund balances. We will discuss this in detail on slide 11, because it deserves its own focused discussion. The Director of Finance then prepares the project-level profit and loss statements for all 20 active projects. Each statement shows the revenue received during the month, the expenses incurred, and the current fund balance. The Director of Finance reviews each one for reasonableness before it is distributed to the project leader. They also prepare the consolidated financial statements for the host organization, the statement of financial position, the statement of activities, and the statement of functional expenses. These are the statements the Board of Directors will see and the auditors will test. The Director of Finance records any final month-end journal entries, depreciation of fixed assets, allocation of shared costs, reclassification of net assets when restrictions are met. These entries require professional judgment, which is why they are not delegated to the accountant. And finally, the Director of Finance closes the accounting period in Sage Intact. This is the act that locks the month. No further transactions can be posted to that period without the Director of Finance deliberately reopening it. Only the Director of Finance has this authority. The complete financial package, consolidated statements, project-level statements, and a narrative summary is delivered to the Executive Director for review by approximately Business Day 12. The Executive Director reviews it, asks questions, and approves it. If it is a board reporting month, the Director of Finance prepares the board financial package as well. The target is to complete the entire close within 15 business days of month end. That is aggressive, but achievable, if the accountant's preparatory work is timely and accurate, and if the Director of Finance protects their close period calendar from distractions. A word of wisdom from experience. The monthly close is not the time for meetings, strategic planning sessions, or new project onboarding. During the first 2 weeks of every month, the Director of Finance's priority is the close. Everything else waits. The financial statements are the Director of Finance's most visible work product. They are the documents that the Executive Director reads, the Board reviews, the auditors test, and the funders rely on. If the dimensional architecture in Sage Intact is the foundation, the financial statements are the building that everyone sees. Let me walk through each set of statements the Director of Finance prepares. First, the organizational financial statements, prepared monthly. The Statement of Financial Position, what most people call the balance sheet, shows the organization's assets, liabilities, and net assets as of the last day of the month. For a fiscal sponsor, the most important line on this statement is the net assets section, which must be properly divided between net assets without donor restrictions and net assets with donor restrictions. Getting this division right depends entirely on the accuracy of the fund type dimension coding throughout the month. The Statement of Activities, the income statement, shows revenue and expenses for the month and year to date. Again, this must be presented with the proper net asset classification, showing which revenue was unrestricted and which was restricted, and showing the release of restrictions when restricted funds are spent for their intended purpose. The Statement of Functional Expenses breaks down the organization's expenses by both natural classification, salaries, supplies, professional services, and functional classification, program services, management and general, and fundraising. This statement is required for the annual audit and the Form 990, but the Director of Finance should prepare it monthly to ensure the allocations are being applied consistently. Alongside these statements, the Director of Finance prepares a narrative summary, a brief written document that highlights key items for the Executive Director. Did a large grant payment arrive this month? Did any project's fund balance drop below a concerning threshold? Were there any unusual transactions? The narrative gives context to the numbers. Second, the project-level profit and loss statements, 20 of them, one for each active project. The Director of Finance generates these from Sage Intact by filtering the financial data by the project dimension. Each statement shows the project's revenue by source, expenses by category, and current fund balance. The Director of Finance reviews each one before it is distributed, looking for anything that seems off. Did a project show expenses but no revenue? Did a project's fund balance change dramatically? These are signals that something may need attention. An important note. These project statements will be read by project leaders who are often not financial professionals. The Director of Finance must ensure the statements are clear and accessible. Avoid excessive accounting jargon. Use plain language labels. If a project leader cannot understand their own financial statement, the statement has failed its purpose. Third, grant reports, prepared as needed based on funder reporting schedules. The Director of Finance pulls budget to actual reports from Sage Intact, filtered by the grant dimension, and prepares the financial section of each grant report in the format the funder requires. Some funders have their own templates. Others accept a standard expenditure report. The Director of Finance must be familiar with each funder's requirements. Fourth, the Board Financial Package, prepared quarterly or as required by the Board's meeting schedule. This includes the consolidated financial statements, plus a dashboard summary showing total funds under management, the number of active projects, key financial metrics, and any items requiring Board attention. And fifth, the annual financial statements prepared for the auditors, which include the full set of statements plus the notes to the financial statements and all supporting schedules. The Director of Finance maintains these schedules year-round as part of the audit binder, so that when audit time arrives, the package is already substantially complete. 20 project statements, organizational statements, grant reports, board packages, and audit schedules. This is a significant volume of work, and it is work that requires both technical skill and professional judgment. It cannot be delegated. The accountant can assist with pulling data and formatting, but the Director of Finance reviews, finalizes, and signs off on every statement that leaves the finance office. I told you this topic deserved its own slide, and here is why. Of everything the Director of Finance does, every payment they approve, every report they prepare, every system they configure, restricted fund verification is the single most important task they perform each month. Let me explain what restricted funds are and why they matter so much. When a donor gives money to one of your sponsored projects and designates it for a specific purpose, say scholarships for low-income students, those funds are classified as temporarily restricted. They can only be spent on that specific purpose. When a funder awards a grant with specific budget categories and a defined grant period, those funds are also temporarily restricted. The restriction is a legal obligation. It is not a suggestion. It is not a guideline. It is a binding commitment that the funds will be used as the donor or funder intended. The Director of Finance is the person responsible for ensuring that every restricted dollar is tracked correctly and that the restricted fund balances on the financial statements are accurate. Here is what that verification looks like in practice. Each month, as part of the close process, the Director of Finance generates a restricted fund balance report from Sage Intact. This report is filtered by the fund type dimension, showing only temporarily restricted transactions, and grouped by project and grant. The Director of Finance then verifies three things. First, does the total temporarily restricted net assets figure on the balance sheet equal the sum of all individual project and grant restricted fund balances? If these two numbers do not match, something is wrong, and it must be found and corrected before the month is closed. Second, does each project's restricted balance accurately reflect the actual unspent restricted gifts and grants for that project? The Director of Finance cross-references the Sage Intact data with the grant module to confirm that the remaining balance for each grant matches what the expenditure reports show. Third, have any restrictions been met during the month that require a reclassification? This is where professional judgment comes in. When a temporarily restricted donation is spent for its intended purpose, the restriction is considered satisfied, and the funds must be reclassified from net assets with donor restrictions to net assets without donor restrictions. This is done through a journal entry, a debit to net assets with donor restrictions, and a credit to net assets without donor restrictions. The Director of Finance, and only the Director of Finance, records these reclassification entries. This is not delegated to the accountant because it requires professional judgment about whether a restriction has actually been met. Did the project spend the scholarship funds on actual scholarships? Did the grant-funded expenses fall within the allowable categories? The Director of Finance must evaluate each situation and make the determination. Every reclassification entry must be documented with a clear description of which restriction was met and what evidence supports the reclassification. The auditors will test these entries, and they will expect to see documentation. Now, why did I call this the most critical monthly task? Because errors in restricted fund tracking are the most common audit finding in non-profit organizations, and they are especially common in fiscal sponsors, where the volume of restricted funds is high and the complexity of tracking them across multiple projects and grants is significant. An audit finding in this area can damage the organization's credibility with funders, trigger additional scrutiny from regulators, and, in severe cases, jeopardize the organization's tax-exempt status. The Director of Finance prevents this by performing this verification every single month without exception, without shortcuts. It is the Guardian's most sacred duty. Grant management is where the Director of Finance's role becomes most complex and most consequential. A single grant can involve tens of thousands or even hundreds of thousands of dollars, with specific rules about how every dollar can be spent. The Director of Finance is the person who translates those rules into system configurations and spending controls. Let me walk you through what happens when a grant is awarded to one of your sponsored projects. The process begins when the program manager receives notification of the grant award, usually from the project leader or directly from the funder. The program manager obtains the grant agreement document and forwards it to the Director of Finance. The Director of Finance then reads the grant agreement in its entirety. Not skims it, reads it. They are looking for very specific information. What is the total award amount? How will the funds be paid, as a lump sum, in installments, or on a cost reimbursement basis? What are the grant period start and end dates? What is the budget broken down by expense category? Are there spending caps on any category, for example, no more than 15% on administrative costs? Is there an indirect cost allowance? Are there match requirements? Does the project need to raise a certain amount from other sources? What is the reporting schedule? Monthly, quarterly, semi-annual, annual, or final only? And are there any special conditions, restrictions on subcontracting, requirements for prior approval of certain expenses, or specific documentation standards? The Director of Finance must understand all of this before configuring the system. Next, the Director of Finance goes into Sage Intacct and creates the grant record. They create a unique grant dimension code using a naming convention that includes the project code and the funder name, such as PRJ-001-Ford-2026. They link this grant dimension to the corresponding project dimension so that grant activity is always visible within the project's financial data. In the Grants Management module, the Director of Finance enters the budget by expense category: personnel, fringe benefits, travel, supplies, contractual services, equipment, indirect costs, and whatever other categories the funder has defined. They set budget alerts at 75% and 90% of each line item. These alerts are early warning systems. They notify the Director of Finance when spending is approaching the limit, so they can take action before a budget is exceeded. The Director of Finance also sets the default fund type for all transactions coded to this grant to temporarily restricted, because grant funds are, by definition, restricted for the purposes specified in the grant agreement. Finally, the Director of Finance establishes the spending controls. They define which expense categories are allowable under this grant and communicate those parameters to the assigned program manager. From this point forward, Every time a grant-funded expense comes through the Tier 2 approval process, the Director of Finance checks it against these parameters. Is this expense in an allowable category? Is the budget line sufficient? Is the grant period still active? The Director of Finance is the grant compliance gatekeeper. Of all the daily tasks the Director of Finance performs, payment approval is the one that most directly protects the organization's funds. Let me walk you through exactly what happens and what the Director of Finance is looking for. Every payment in this organization follows a 4-stage life cycle. Stage 1. The project leader submits a payment request through bill.com with supporting documentation. Stage 2. The assigned program manager reviews the request to confirm it aligns with the project's approved budget and that the documentation is complete. This is the Tier 1 approval. Stage 3. The Director of Finance reviews the request from a financial perspective. This is the Tier 2 approval. And Stage 4, the accountant processes the approved payment. Now, the Director of Finance is only involved at Stage 3, and only for payments exceeding $500. For routine expenses under $500, the Program Manager's Tier 1 approval is sufficient, and the payment goes directly to the accountant for processing. This is by design. If the Director of Finance had to approve every single payment across 35 projects, they would do nothing else all day. But for payments over $500, the Director of Finance's review is mandatory. And here is exactly what they evaluate. First, does the project have sufficient funds? The Director of Finance checks the project's current fund balance in Sage Intact. If the project has $10,000 available and the payment request is for $2,000, that is fine. If the project has $3,000 available and the payment request is for $2,800, the Director of Finance needs to consider whether approving this payment will leave the project with an uncomfortably thin margin. Second, if the expense is being charged to a grant, is it allowable? The Director of Finance must know the terms of the grant well enough to determine whether this type of expense is permitted. A grant that funds direct program services may not allow the purchase of office furniture. A grant with a 15% administrative cost cap may not allow another administrative charge if the cap has already been reached. Third, if grant funded, will this expense push any budget line item over its approved limit? The Director of Finance checks the grant budget to actual report in Sage Intact. If the supplies line has a $5,000 budget and $4,800 has already been spent, a $300 supply purchase will exceed the limit. The Director of Finance must decide whether to approve the expense and request a budget modification from the funder, or to deny the expense and ask the project leader to find an alternative funding source. Fourth, does the expense fall within the grant period? A grant that ended on March 31st cannot fund an expense incurred in April. This seems obvious, but it happens more often than you might think, especially when project leaders are not closely tracking grant timelines. Fifth, is the vendor's W-9 on file? For new vendors, the Director of Finance confirms that the accountant has collected the W-9 before the first payment is processed. This is a compliance requirement for year-end 1099 reporting. And sixth, are the payment terms correct? Is this a net 30 invoice, a due upon receipt invoice, or a rush payment? The Director of Finance ensures the payment timing is appropriate. For payments exceeding $5,000, the Director of Finance's approval advances the request to the Executive Director for an additional Tier 3 review. The Executive Director evaluates the payment from a strategic and reputational perspective. And here is the most important rule of all. The Director of Finance never initiates a payment and approves it. The person who requests a payment cannot be the person who approves it. This separation of duties is the cornerstone of internal controls in any organization managing funds held in trust. If the Director of Finance needs to make a purchase for the host organization itself, they submit the request like anyone else, and the Executive Director approves it. No exceptions. If there is one process, setting up a grant correctly is only the beginning. The Director of Finance must then monitor that grant throughout its entire life cycle, from the first dollar spent to the final report submitted. Let's talk about ongoing monitoring first. At minimum, monthly, and more frequently for grants with high spending velocity, the Director of Finance reviews the budget-to-actual reports in Sage Intacct for every active grant. They are looking at two things. First, are any budget line items approaching their limits? The 75% and 90% alerts help with this, but the Director of Finance should not rely solely on automated alerts. A proactive review catches patterns that alerts miss. For example, a line item that is at 60% utilization with only 20% of the grant period remaining, which suggests the project may not spend all the funds in that category. Second, is the overall spending velocity appropriate? If a 12-month grant is 6 months in, and only 20% of the funds have been spent, that is a concern. The project may need to accelerate its activities, or the Director of Finance may need to discuss a no-cost extension with the funder. Conversely, if a grant is 6 months in and 80% spent, the project is on pace to exhaust its funds well before the grant period ends. When the Director of Finance identifies a concern, they notify the assigned program manager, who then works with the project leader to address it. The Director of Finance does not typically communicate directly with project leaders on grant issues. The program manager serves as the intermediary. But the Director of Finance makes the financial determination about whether a problem exists. And remember, every single grant-funded expense that exceeds $500 passes through the Director of Finance's Tier 2 approval. This is not just a payment approval, it is a grant compliance check. Every time. Now, financial reporting. When a grant reporting deadline approaches, and the airtable reminders will ensure the Director of Finance knows well in advance, the Director of Finance pulls the expenditure data from Sage Intacct. They filter by the grant dimension and generate a report showing spending by category for the reporting period. They then format this data according to the funder's requirements. Some funders have specific templates, others accept a standard expenditure report. The Director of Finance prepares the financial section of the grant report. The Program Manager prepares the programmatic section, the narrative about what the project accomplished. The two sections are compiled into a complete report, which the Director of Finance reviews one final time to ensure the financial data is accurate and consistent with the general ledger. The Executive Director then reviews and approves the complete report before submission. Finally, grant closeout. When a grant reaches its end date, the Director of Finance takes several critical actions. First, they enforce the spending cutoff. No expenses incurred after the grant end date can be charged to that grant. The Program Manager communicates this deadline to the project leader at least 30 days in advance, but the Director of Finance is the one who enforces it by rejecting any Tier 2 approval that attempts to charge an expense to an expired grant. Second, they prepare the final financial report, a complete reconciliation of all funds received and all funds expended under the grant. Third, they determine the disposition of any unspent funds. The grant agreement specifies what happens to remaining funds. They may need to be returned to the funder, or the funder may allow them to be retained for continued use. The Director of Finance processes the appropriate transaction, either a payment back to the funder or a reclassification of the remaining funds. And fourth, they deactivate the grant dimension code in Sage Intacct. This prevents any future transactions from being accidentally coded to a closed grant. The historical data remains accessible for reporting and audit purposes, but no new activity can be recorded. Grant management is a cycle: setup, monitoring, reporting, closeout. The Director of Finance is present at every stage. The annual audit is the moment of truth for the Director of Finance. It is the time when an independent third party, a licensed CPA firm, examines your financial records tests your transactions, evaluates your internal controls, and renders an opinion on whether your financial statements are fairly presented. The Director of Finance is the primary liaison with the auditors. They are the person the auditors call when they have questions, the person who provides documentation, and the person who discusses technical accounting issues. But here is the secret to a smooth audit, and I say this with the conviction of someone who has seen both smooth audits and painful ones. The secret is preparation that happens year-round, not in the 2 weeks before the auditors arrive. The Director of Finance maintains an audit binder throughout the year. This binder contains the key schedules that auditors always request: the restricted fund balance schedule, the grant tracking schedule, the related party transaction schedule, the fixed asset and depreciation schedule, and the prepaid expense and accrual schedules. These schedules are updated monthly as part of the close process. By the time the audit arrives, they are already complete and current. There is no scramble. There is no panic. There is only a binder that is ready. In the weeks before the audit, the Director of Finance completes the year-end close, which is an extended version of the monthly close with additional adjustments for year-end items. They prepare the annual financial statements with notes, the complete set that the auditors will test. They compile all items on the PBC list, the Prepared by Client list, which is the auditor's request for specific documents and schedules. The accountant assists with this, pulling bank statements, preparing bank confirmations, and organizing transaction documentation. But the Director of Finance owns the process and ensures everything is complete. During the audit fieldwork, which typically lasts 1 to 2 weeks, the Director of Finance is available to the auditors as their primary contact. The auditors will test samples of transactions. They will select random donations and verify they were recorded correctly, select random payments and verify they were properly approved and documented, and test the restricted fund balances against the underlying grant agreements. When they have questions, and they always have questions, the Director of Finance answers them. When they need additional documentation, the Director of Finance provides it, often with the accountant's help in pulling specific invoices or receipts. If the auditors propose adjustments, corrections to the financial statements based on errors they found, the Director of Finance discusses each one. Some proposed adjustments are straightforward and should be accepted. Others may be based on a misunderstanding of the organization's accounting treatment, and the Director of Finance may need to explain and defend the organization's position. This requires both technical knowledge and professional confidence. After the fieldwork, the auditors issue a draft audit report and a management letter. The audit report contains the auditor's opinion on the financial statements. The management letter contains any findings, weaknesses in internal controls, errors that were identified, or recommendations for improvement. The Director of Finance reviews both documents for accuracy and develops corrective action plans for any management letter findings. The Executive Director then presents the audit results to the Board of Directors, with the Director of Finance present to answer technical questions. A clean audit opinion, what auditors call an unmodified opinion, is the goal. It means the auditors found no material misstatements in your financial statements. Achieving this consistently, year after year, is the Director of Finance's professional legacy. It is the ultimate validation of their work. Beyond the audit, the Director of Finance has several other annual responsibilities that are critical to the organization's compliance and sustainability. Let me walk through the most important ones. First, the Form 990. This is the annual information return that every tax-exempt organization must file with the IRS. It is a public document. Anyone can request a copy, and it provides detailed information about the organization's finances, governance, and activities. The Form 990 is typically prepared by the organization's external CPA firm, but the Director of Finance provides all the underlying data. This includes the financial statements, the schedule of grants and disbursements to sponsored projects, compensation information for officers and key employees, and details about the organization's public charity status. The Director of Finance then reviews the draft Form 990 with extreme care. There are several sections that require particular attention for a fiscal sponsor. Schedule A determines the organization's public charity status, and maintaining that status is essential to the fiscal sponsorship model. Schedule D provides supplemental financial information. Schedule 1 lists all grants and assistance provided to organizations and individuals, which, for a fiscal sponsor, means listing the disbursements to each sponsored project. And Part 7 reports compensation for officers, directors, and key employees. The Executive Director signs the Form 990, but the Director of Finance is responsible for ensuring it is accurate and filed on time, by the 15th day of the 5th month after the fiscal year end, with extensions available if needed. Second, the annual budget. The Director of Finance develops the host organization's annual operating budget. This is the budget for the host organization itself, not the individual project budgets. It projects the host organization's revenue, primarily fiscal sponsorship fees, but also any grants or donations received for the host organization's own operations. And it projects the host organization's expenses, staff salaries and benefits, software subscriptions, office costs, insurance, audit fees, and other overhead. The Director of Finance presents the draft budget to the Executive Director for review, and then to the Board of Directors for approval. Once approved, the Director of Finance monitors budget-to-actual performance throughout the year, comparing actual revenue and expenses to the budgeted amounts, and investigating significant variances. Third, the Director of Finance has several other annual responsibilities. They conduct the year-end financial close, which is an extended version of the monthly close with additional year-end adjustments. They lead the annual review of internal control policies, evaluating whether the current controls are adequate and recommending updates. They conduct the annual cost-benefit review of all software subscriptions. Are we getting value from Sage Intacct, GiveButter, Bill.com and Airtable? Are there features we are paying for but not using? Are there better options available? They participate in the annual review of insurance coverage, working with the Executive Director to ensure that the organization's directors' and officers' insurance, general liability, cyber liability, fidelity bond, and workers' compensation coverage are adequate for the organization's current size and risk profile. They lead the annual review of the fiscal sponsorship fee structure, evaluating whether the current fees are sufficient to cover the host organization's costs and recommending adjustments if needed. And they coordinate the preparation and distribution of W-2 forms for all 30 employees, 5 central office staff and 25 project staff, and 1099 forms for all applicable vendors. The accountant does the processing through Gusto and Bill.com, but the Director of Finance reviews the output for accuracy before distribution. The annual cycle is demanding, but it is predictable. A Director of Finance who plans ahead, who knows that audit season is coming in March, that the budget is due in November, that the Form 990 is due in May, can manage these responsibilities without being overwhelmed. The key is to never be surprised by a deadline. No one works in isolation, not even the Director of Finance. And it is important to understand what this role depends on others to complete, because when those dependencies fail, the Director of Finance's work is directly affected. Let me be candid about this. The Director of Finance can be the most skilled financial professional in the world. But if the accountant is not verifying the daily syncs, if the program managers are not reviewing payment requests promptly, or if the executive director is not available to approve high-value payments, the entire operation slows down. Let's start with the accountant, because this is the Director of Finance's most critical dependency. The accountant performs the daily transactional work that feeds into everything the Director of Finance does. Every morning, the accountant verifies that the GiveButter donations synced correctly to Sage Intacct. Every morning, they verify that the Bill.com payments posted correctly. They reconcile the bank activity. They process the approved payments. They collect W-9 forms from new vendors. They process payroll. And at month-end, they prepare the bank reconciliations, the preliminary trial balance, and the supporting work papers that the Director of Finance needs to begin the close. If the accountant falls behind, if the daily verifications are skipped, if discrepancies accumulate, if the month-end work papers are late, the Director of Finance cannot do their job. The monthly close cannot begin until the accountant's preparatory work is complete. This is why the Director of Finance directly supervises the accountant. They need to ensure this work is done correctly and on time. Next, the program managers. The Director of Finance depends on the program managers for two critical functions. First, the Tier 1 payment request reviews. Before a payment request reaches the Director of Finance for Tier 2 approval, the program manager must have already verified that it aligns with the project budget and that the documentation is complete. If the program manager passes through a poorly documented or misaligned request, the Director of Finance must send it back, which wastes time and delays the payment. Second, the Director of Finance depends on program managers for the programmatic data needed for grant reports. The Director of Finance can prepare the financial section of a grant report in a matter of hours, but the report cannot be submitted without the programmatic narrative, the description of what the project accomplished, and that information comes from the project leader through the program manager. If the program manager does not collect this information on time, the grant report deadline is at risk. The program managers also serve as the communication channel between the Director of Finance and the project leaders. When the Director of Finance needs a project leader to know that their grant spending is approaching a limit or that a spending cut-off date is approaching, the program manager delivers that message. The Director of Finance does not typically communicate directly with project leaders on financial matters. The program manager is the intermediary. Finally, the Executive Director. The Director of Finance depends on the Executive Director for Tier 3 payment approvals, payments exceeding $5,000 that require executive sign-off. If the Executive Director is traveling or unavailable, those payments are delayed. The Director of Finance also needs the Executive Director to review and approve the monthly financial statements, to sign the Form 990, to execute the audit engagement letter, and to present financial results to the board. The Director of Finance also depends on the Executive Director for strategic decisions, changes to the fee structure, updates to internal control policies, and decisions about organizational capacity. The Director of Finance can recommend, but the Executive Director decides. Understanding these dependencies is not about assigning blame when things go wrong. It is about building a team culture where everyone understands that their work affects everyone else's work. The daily stand-up meeting exists precisely for this reason, to surface blockers early before they cascade into larger problems. We have spent most of this presentation discussing what the Director of Finance does, the tasks, the systems, the reports. Now I want to talk about the role the Director of Finance plays as the organization's financial conscience, the person responsible for ensuring that the controls designed to protect funds held in trust are actually working. This begins with direct supervision of the accountant. The accountant handles the highest volume of financial transactions in the organization, processing payments, recording donations, reconciling bank accounts, running payroll. The Director of Finance must ensure that this work is done correctly. That means reviewing the accountant's daily reconciliation summaries, approving every journal entry the accountant drafts before it is posted, and approving every new vendor record before any payment can be processed to that vendor. This is not micromanagement. This is oversight. The difference is intent. Micromanagement is about control. Oversight is about verification. The Director of Finance trusts the accountant to do their job, but verifies the output because the stakes are too high to rely on trust alone. The Director of Finance also conducts the accountant's annual performance evaluation, assessing their accuracy, timeliness, attention to detail, and professional development. Next, system access controls. The Director of Finance is responsible for configuring role-based permissions in every financial system: Sage Intacct, Bill.com, and GiveButter. They determine who can see what, who can do what, and who is locked out of what. And they review these permissions quarterly to ensure they are still appropriate. Did a team member change roles? Did someone leave the organization? Did a project leader's access need to be adjusted? The quarterly access review catches these situations before they become vulnerabilities. The Director of Finance also ensures that no user has incompatible permissions, meaning no single person has the ability to both initiate and approve a transaction. This is the principle of separation of duties, and it is the most fundamental internal control in any organization managing other people's money. Speaking of separation of duties, the Director of Finance must hold themselves to the same standard. When the Director of Finance needs to make a purchase for the host organization, a software subscription, a conference registration, a professional service, they submit the request through Bill.com like anyone else, and the Executive Director approves it. The Director of Finance does not approve their own expenses. Ever. Bank account access is restricted to the Director of Finance and the Executive Director. The accountant may have view-only access for reconciliation purposes, but they cannot initiate transfers, write checks, or move funds outside of the Bill.com workflow. This is a non-negotiable control. The Director of Finance also conducts periodic spot checks. This means randomly selecting transactions from the prior month and verifying that the supporting documentation is on file, that the dimensional coding is correct, and that the approval workflow was followed. Spot checks are not about catching people doing something wrong. They are about confirming that the systems and processes are working as designed. And they have a powerful deterrent effect. When people know that their work may be randomly checked, they are more careful. Finally, escalation authority. The Director of Finance sits at the center of the organization's escalation chain for financial matters. The accountant escalates unresolved discrepancies, a sync error they cannot figure out, a bank transaction they cannot identify, a vendor payment that does not match the invoice. The program managers escalate financial questions from project leaders. Can we reallocate budget funds? Can we use grant money for this expense? Why is our fund balance different from what we expected? And the Director of Finance escalates to the Executive Director when a situation exceeds their authority. A policy decision that needs executive approval, a compliance concern that requires board notification, or, and I say this with the gravity it deserves, suspected fraud. If the Director of Finance suspects that funds have been misappropriated, that a fictitious vendor has been created, that documentation has been falsified, or that any other form of financial fraud has occurred, they have a duty to report it immediately to the Executive Director, and, if the situation warrants, directly to the Board of Directors and Legal Counsel. This is not optional. This is a fiduciary obligation. The Director of Finance is the guardian. The internal controls are their tools, and the willingness to act when something is wrong, that is their courage. Setting up a grant. And so we arrive at the end of our time together. Let me gather the threads of what we have discussed and weave them into a final tapestry. The Director of Finance of a fiscal sponsor host organization is not simply an accountant with a better title. They are the person most directly responsible for the financial integrity of an organization that holds funds in trust on behalf of 35 community projects. With 292 distinct function involvements, they touch more of the organization's work than any other role. Everything they do is guided by 3 pillars: stewardship, accuracy, and transparency. Stewardship because the funds they manage belong to others and must be treated with the highest standard of care. Accuracy because errors in a fiscal sponsor's books can have legal, regulatory, and reputational consequences. And transparency because the project leaders, donors, funders, and board members who depend on the organization's financial reports must be able to trust them completely. We explored the Director of Finance's ownership of Sage Intacct, the chart of accounts, the 4 dimensions, the grants management module, the reporting templates, the user permissions, and the period closing authority. We discussed their oversight of the integrations between GiveButter, Bill.com, and Sage Intacct, building the bridges that others walk across daily. We walk through a typical day: the morning financial review, the Tier 2 payment approvals, the strategic financial work, and the afternoon reporting and oversight. We examined the payment approval process in detail, the 6 questions the Director of Finance asks before approving every payment over $500. We covered the monthly close, the most important recurring process in the organization, and the Director of Finance's personal responsibility for reviewing the trial balance, verifying restricted fund balances, preparing financial statements, recording month-end journal entries, and closing the period. We gave special attention to restricted fund verification, the single most critical monthly task, and the net asset reclassification entries that only the Director of Finance can record. We followed the grant management lifecycle from setup to closeout, the Director of Finance's role in reviewing grant agreements, configuring Sage Intacct, monitoring budgets, preparing financial reports, enforcing spending cutoffs, and deactivating closed grants. We discussed the annual audit, the year-round binder maintenance, the pre-audit preparation, the fieldwork liaison role, and the review of the draft audit report. And we covered the other annual responsibilities, the Form 990, the organizational budget, the policy reviews, and the year-end processes. We acknowledged what the Director of Finance depends on others to complete: the accountant's daily transactional work, the program manager's payment reviews and programmatic data, and the executive director's approvals and strategic decisions. And we closed with internal controls, the supervision of the accountant, the system access controls, the separation of duties, the spot checks, and the escalation authority that makes the Director of Finance the organization's financial guardian. If you are stepping into this role, I hope this presentation has given you a clear and honest picture of what awaits you. It is demanding work. It requires technical skill, professional judgment, and an unwavering commitment to doing things correctly. But it is also deeply meaningful work, because every dollar you manage correctly is a dollar that reaches a community project and makes a difference in someone's life. If you are the executive director or a board member, I hope you now understand why this role is so critical, and why the person who fills it must be given the authority, the resources, and the respect they need to succeed. I want to thank you for your time and attention today. I know I have asked a great deal of your concentration, and I hope the information has been worthy of it. As a reminder, the content for this presentation was generated by Claude 4.6 Opus. The images were created using Nano Banana Pro, and my avatar was generated by Hey Jen. Thank you. And may your books always balance. And so we